Hi, everybody. This is Hyperwave. I'm here with Tyler, and we're excited to be back. Woo! I will start off by saying Bitcoin has stopped going down for now. So at least that's the good news to start us off with. Everybody, please let me know if this is working because I am still trying to figure out Zoom. Anyways, I guess I'll just turn it over to Ty. Like we haven't been on for a little bit. You wanna say what's up?
Yeah, hello everybody. We apologize for not being on. I've tried to make it up with a bunch of tweets, keeping everybody up to date with what Leah and I are thinking. We're going to get into specifically Bitcoin and also a quick look at traditional markets and my thinking about that. But first of all, one of the reasons we haven't been on very much is we've been working on our website, which is now lucidinvestmentstrategies.com. lucidinvestmentstrategies.com. Lucid Investment Strategies, is it LLC.com? No, just lucidinvestmentstrategies.com.
It's up.
And it's up and you can see it and you can do everything on it. You can look at Hyperwaves. You can read about our upcoming webinars. You can read about unconfiscatable. You can sign up. You can pay for services. You can do everything on this webinar. And it's all because of the wonderful Leah. She has been working unbelievable hours making sure that this is complete and simple as possible. One of the things she's looking at right now is our upcoming webinar, which is December the 8th at 2 o'clock. We've changed that, moved it around. I've been working on building a number of things to talk about. This, again, is going to be a very important webinar because what we're doing is in these 4-hour segments, we are tying things together. You've heard us talk a lot about Hyperwave and Consensio. You've seen on our vlogs the use of things like stop and reverse points and MACDs and moving averages. And I understand why that is confusing relative to the big topics of Hyperwave and Consensio. And we have not yet done a full workshop on Hyperwave. Our first one is going to be in Las Vegas in January at the Unconfiscatable Conference. It's going to be many, many hours long where we go into far more detail than we could have in an individual vlog or even 10 or 15 vlogs. So what we're doing in December at the webinar is going to be tying together how a number of different technical indicators I use complement Hyperwave and complement Consensio. To understand how I look at the world, you need to understand Hyperwave and Consensio. You need to understand the trend is your friend. You need to understand that you buy dips in a bull market, but you always sell bounces in a bear market, such as the one we're in right now with Bitcoin. But putting that all together just sounds like a lot of words. We're going to make those words a lot more significant on this December 9th webinar. So you can sign up for it now on our new website. And it's very simple. And you can pay in Bitcoin, you can use PayPal, and you can do it right from the place you register. You will get immediate response showing that you are in and how you paid and when you paid. It's really a remarkable website. And thank you very much, Leah, and the people you've been working with so diligently to get this up and going. Okay, So
I'm jumping in.
please.
And the best part is you get Tyler's Twitter feed at the bottom.
Oh yeah, I forgot about that. So if you miss me on Twitter, it's all right there. As soon as I put a tweet up, you can get it, and all the other ones. And you can also get all of our videos right there on the website. You can go all the way back to the beginning. So you can watch it all in one place. You don't have to go from place to place anymore. Really a wonderful job. Thank you so much, Leah. Fabulous job. It's great having you as a partner.
Woo!
Okay, now what we're going to do today, we're going to start off with a little show and tell. I want to thank, but I won't name, they know who they are, one of our listeners who sent me a subscription to Barron's because I'm too lazy to run around town and buy them every week. And I can't figure out how you order anything on computers anymore. So the reason I wanted to show you this, everybody needs to have both IBD, Investors Business Daily, and Barron's. So all the rest of it is okay, but you absolutely need these things. I talked in our last webinar about this, which are closed-end funds. And the only place that you can get a full list every single week of every single closed-end fund, their prices, their premiums, their discounts, is on this 2-page spread in Barron's. You can also get all of the mutual funds where you can just glance down. I spent years and years looking at every single mutual fund because they're in alphabetical order, just looking at the year-to-date, the 3-year numbers. You can just scan down and you can pick out those that are doing well or doing poorly. And that's a good starting place for making decisions. All of it right here in this magic thing called Barron's. Okay, next on show and tell. These are, people keep asking me about I read a lot of books, and people ask me which ones are the most significant in my worldview of things. So from time to time, I'll mention things, but today I'm just going to show you things that really have meant a lot to me. This first one is Carl Sagan's book that's called The Varieties of Scientific Experience. It's really wonderful. Carl Sagan, The Varieties of Scientific Experience. Second one I've talked about before, people wanting to understand Wall Street need to read Norman Fosback's book, Stock Market Logic. It's come out in many, many editions since the 1970s. It's fabulous. I love this book by Michael Lewis called Next. Michael Lewis, as you know, is a brilliant writer, very funny, but Next is The Future Just Happened. And that falls in line with a lot of the other things that I've been talking about.
Hi.
Yes.
Can I jump in?
Please.
Okay, also for everybody who doesn't know, Michael Lewis, I believe, wrote Moneyball, right?
Absolutely.
And my favorite one of his, just saying, is Flash Boys, which was when he kind of like concluded that HFTs, because everybody loves asking us about bots, so high frequency tradings, like, and how they're very unethical. So, but Moneyball, so everybody would actually kind of know his name. All right.
Yeah, great writer. Michio Kaku, The Future of the Mind. I read this after I read all of Kurzweil's things about artificial intelligence, but it's brilliant. Most of you have already read this, Freakonomics. Fantastic book about, take a look at economics in a much broader sense than you've ever done before. This has been my Bible for a long time, Einstein's clocks and Poincaré's maps. You'll love it. All about time and what it means and what it doesn't mean. Bitcoin Standard, we had the gentleman on, as you know, the amazing Saifedean Ammous. Anyone that's listening to us needs to understand what's in that book, not just as a throwaway, but really study it. Brilliant stuff. And then, of course, this is what got me really into Bitcoin back in 2012. The Singularity is Near by Ray Kurzweil, and all of his other books, The Intelligent Machine, The Spiritual Machine, and he's got a number of other ones. Okay, so at least now you've got pictures of them. So I will keep doing this over and over at various times just to catch up on things. Let's talk about Bitcoin. I'm going to do a screen share real quickly, because what we're going to do is we are going to just do what I have done from the beginning, which is talk about this thing called a hyperwave in Bitcoin. But I want to bring you right up to date, because we're getting a little bit of a bounce, and there's a raging debate about what's about to happen with Bitcoin price. To me, there is no debate. It's very clear. It has been clear. And what that thing is that is clear is this thing called a hyperwave. Now, Leah and I will be speaking this weekend in Washington, D.C. at the Elite. It's just called the Elite Conference.
So it's the Washington Elite Conference.
The Washington Elite Conference. And one of the things that I've been thinking about a lot and talking to people about is this hyperwaves in general. It's just happenstance, nothing more than that, that Bitcoin went into one of these things. Now, those of you that have listened to us, and those of you that will be able to attend in Las Vegas and attend our workshop on hyperwave, you'll get a lot of this. But the basis of a hyperwave is a shift in macroeconomic forces. And we've talked about that relative to the credit cycle, where we had an 80-year hyperwave, the stock market in the 1920s, the stock market in the 1990s, the mortgage market, the Japanese stock market. All of those marked major shifts in world economics for a variety of reasons, and they express themselves in the marketplace in the form of hyperwaves. This particular hyperwave, one of very few that have ever occurred, happened very, very quickly. It took 10 years basically from bottom to top, and now we are running into the 11th year as we go from top to bottom. And then, as you know, I believe there's a very good chance we're going to get another bigger one following this one. But in any case, what you're looking at is the perfect hyperwave. Just all the parts of it are just wonderful. Now, what we've been saying since last December is this 19,666 top was the end of the up move, which is phase 1, 2, 3, and 4, and the beginning of a down move, which has a 5 and a 7 in it. This is the 5 that took us all the way down to the $10,000 level, basically. And then the 6 that took us all the way back up to almost 17,000. So this is the 4, the 5, the 6, and ever since it's been the 7. And 7 is still in force and will continue. Now, along the way, we had 2 chances to turn it into what we call a funky hyperwave. The first one was up here with a line I'm not going to put in, but that was the phase 3 line, and it held over and over and over and over again, and it finally broke. And then our last hope in terms of a funky hyperwave was this line that we all watched very, very closely and carefully as we came up to the 6,000 support for price. And on the same day that the 6,000 support broke, so did the phase 2 line. And that ended any chance of what we call a funky hyperwave, which means it doesn't have to return to the beginning, which was 1,000. So now we have to go to 1,000. Okay, now the question is, how do we get there and how long does it take? And the answer is, no one knows. I don't know after studying 350 of them. It could go sideways. It could come up here to the line. It could get above the line. It doesn't matter. This line no longer has any power or force to it. It's been totally negated by what we've seen for the last 2 weeks. What we still have overhead is the 6,000. What used to be support now will be resistance. But the phase 2 line will just keep going up and up and up and up. Just ignore it. It no longer matters. I won't even draw the phase 3 line because it does not matter. They will not act as resistance anymore. Once they're broken, they disappear. You can take them off the chart. I'm keeping this one on just to show you what happens when a phase line breaks. It's not a pretty picture. You don't like them to happen. I was hoping this wouldn't happen. It did. Or if it does break, you want it to get back above it in the same week that the break takes place. Okay. So now let's see where we are today. We've had a nice bounce from 3,500 almost to 4,200, $700, and that's this little green squatty thing down here that doesn't look particularly important to me, and I don't believe that it is. That doesn't mean I don't think it can't go higher. It can. We were so deeply oversold after these 2 candles that a significant counter trend bounce can take place. Now, I tweeted out this morning, I will not play these bounces. Why? Because I didn't play these bounces. I didn't play this one, or this one, or this one, or this one, or this one. And the reason is because I knew we were in a downtrend, and I don't want to ever go against the trend. The trend is down. It's been down for almost a year now. Let's give it 11 months, but it's almost a year. The anniversary of the peak is coming up in a short number of weeks, 2 weeks from now, 2.5 weeks from now. But ever since then, we've been in a downtrend. We still are today. At some point, we will no longer be in a downtrend. We'll be in an uptrend. And then I'm not going to want to do the opposite. I want to stay long at all times as long as the trend is up. But that could be this week, it could be next week, it could be a month from now, it might be a year from now. I've got a feeling it's going to be way out here somewhere when we finally get to the bottom. That's just my personal opinion with a lot of experience. Whatever the market wants to do, I will react to. Okay, let's see what the market is telling us on a weekly basis using all of the same tools that we always use. And we'll start with the stop and reverse point. Now, the stop and reverse point, these little bubbles, have been very boring for a very long time. Because of the sharpness of the price drop, we got a very sharp drop in the stop and reverse points. And we did get a very strong bounce from 6,000 all the way up to this almost 8,500 area that did break the downtrend in the stop and reverse for 4 weeks, these 4 weeks here. But notice what happened. Price came all the way back down and broke back through it, and we've been below it ever since and still are today. Now, Tone has said, and I agree with him, that this was pretty boring. The stop and reverse points didn't help us. Why? Because price was so weak that we couldn't even get close to them. Therefore, they just kept going flat for months. But look what's happening now. They are beginning to drop sharply and will continue to accelerate. That's why this is called a parabolic stop and reverse point. it moves parabolically with a parabolic move in price. We are starting a parabolic move down in price. And therefore, the stop and reverse points are going to accelerate to the downside. We would have to get back up to 7,000 in order to get a buy signal off the stop and reverse points. That ain't going to happen, in my opinion. If it does, that will give us evidence, fairly strong evidence, that something new might be happening. But don't take an if as a when. I don't believe there's one chance in 10 of getting above the 6,000 line again. We might get up to 5,000 here. I doubt that. We might get higher than 5,000. I doubt that even more. I see almost no possibility of getting above 6,000. And therefore, the stop and reverse points in my mind are only going to act as resistance as they begin to accelerate down. As they do, every bounce that we get from here all the way down to 1,000 is going to run into the problem of these silly bubbles being on top of them until they finally break. Now, they might break this way for a short period of time. Therefore, you've got to look at other technical indicators, and that's what we're going to talk about on December the 9th. We're going to look at how all these indicators fit together as opposed to being married to one system or one data point, because they fit very nicely. That's why I like to run through these things with you when I'm trying to explain why I'm either bearish or bullish. So we'll take the stop and reverse points out, and we'll now look at the Bollinger Bands. Throughout this entire period, I didn't believe that any of the bounces were meaningful because they could not get above the midline of the Bollinger Band on a weekly basis. And when they did, they didn't do it with a full candle. This one was the most impressive. But immediately following this one, which was not a full candle above that midline, we had a second line that was a full candle, not above the midline and closed below it. And we've never been able to get back above it throughout this period. So only using Bollinger Bands told me that what Hyperwave was telling me, what stop and reverse was telling me, what Consensio was telling me, made it evident, absolutely evident, that the 6,000 level was not going to hold. And that's why Leah and I continually held to that premise. It was embarrassing at times because it took so long that it allowed a lot of people to believe that 6,000 was for real. But by using multiple technical systems, short, intermediate, and long term, you can come to much more conclusive conclusions. Okay, now we are in a very interesting place relative to the Bollinger Bands. Why? And we've got some people pointing this out, and correctly so. This candle that we're on this week is completely below the lower Bollinger Band. That has the potential of being a buy signal. But what is beginning to happen with the bounce we're in is this lower line is dropping more quickly than the price is able to stay below it. And if we get up to right now 4,400, which we could easily do, we will no longer have a full candle below the lower line, which to me will negate the possibility of a buy signal. Way too early to tell. We're only at Wednesday. We've got to go through Sunday. But I'm saying keep your eyes open for the possibility that we get a full candle below this line and that could be a buy signal, just the way a full candle above the midline increases the probability of going all the way back to the top line. And a full candle above the top line, which we had here in early December, marked the end of the upswing. Okay? You understand why the full candle is important with the Bollinger Bands, the way I interpret it. John Bollinger might dispute this, and he is the king of the Bollinger Bands, but I have found over many, many years that that's a wonderful signal for telling tops of markets, bottoms of markets, and continuations either above or below the midline of the Bollingers. All right, so Sunday will be interesting. We will certainly try to tweet out Sunday night on the close or have another vlog. Okay, let's take the Bollingers off. Let's go to the moving averages. This is Consensio. This is the 2, 7, and 30, which is on a weekly basis the equivalent basically of the 14 or 15 day, the 50 day, and the 200 day, approximately. Close enough. And with these things, close enough is good enough. I change them around a little bit depending on what the asset is. We talked about that in our Consensio talk. First thing I'm going to do is take away the price. Forget price. Price doesn't matter. It only matters in producing the technical signals. But when you get to Consensio, you want to see what it's really telling you. So what we're going to do is we're going to come over here and see where Consensio is. And obviously, it's in the worst possible position it could be. Full bear market, but huge spreads between the short term, the intermediate term, and the long term, all moving down and accelerating. Doesn't matter, the price is popping up from 3,500 higher. It could go to 5,000 and won't do anything. Going to screw around here for a while, but these are going to keep coming down. And that means you're still in a bear market. Let's put the price back on so we can see exactly why and how. What we're doing here is price is trying to turn the short term down, but you can see how far it's got to go to really do any damage to the bearish posture of Consensio. That's why I will not play these bounces. I think you're playing with fire. If you've got all the time in the world on your hands where you can stare at your screen 24 hours a day, get in, get out, move things around, that's great. I'm not interested in doing that. I like to go with the trend, not against the trend, and the trend is clearly down. Okay, let's take a look. Let's close these off and go down to the RSI, which is interesting to me, but disappointing. Disappointing because if we had gotten oversold, which we did not, we got down to 31 approximately, close but no cigar. We need to get down to 25 and maybe 20. And almost no one agrees with me there. So let me explain again my belief that because all of this happened on the bull side of the hyperwave, and all of this is tremendously overbought, and then after being tremendously overbought, not even getting back to the midline, 50%, then going tremendously overbought, just barely breaking through 70 again, tremendously overbought, going on for months and months and months. You don't get away at the end of a hyperwave with tiptoeing towards 30. You blow through it, and that will be capitulation. Until that, we are just prolonging the inevitable by allowing this to bounce further and further up from the 30 line. We are now at about 35, 36, 37. In another day or two, we could be at 40 or 42. That's not good. That's bad because it's simply setting up for the next major downturn. Okay, let's take the RSI off and let's look at the MACD. The MACD is horrible, absolutely horrible, because look where we are. We've got 3 little bitty negative histograms down here. I'll make this bigger. And just barely crossed over to the downside. Look at this back here. This is when the MACD gets oversold. Week after week, month after month, price dropping, trying to go up, price dropping, trying to go up, price dropping, and in the whole time we stay negative. The problem with going sideways at the 6,000 level for so many months was it flattened out the MACD. And what that means, it's going to be very difficult, and we need a tremendous drop. A lot of people think 6,000 down to 3,500 was a tremendous drop. MACD is saying it wasn't. RSI is saying it wasn't. Consensio is saying it wasn't. It was simply the beginning volley of the next major down leg, which will be either a 3 or a 5, and we've only had a 1, and now we're getting a reaction up 2, then we will get a lower 3 and a reaction up 4 maybe, and then a lower 5 before we get to the bottom. Okay, let's take that off. I just wanted to throw out a stochastic RSI because the stochastic RSI looks like it's not going to take much to turn it slightly positive. But notice that it is not doing it from lower levels than we have seen before. Now, some people would call that a non-confirmation. I do not. I say that what we're looking at here is the result of 3.5 or 4 months of sideways action at 6,000. And we have just broken through that, and therefore almost no real damage has been done with any of these momentum indicators. But it also means that that is still yet to come. All right. So as you may well understand, I am not bullish in any sense on the crypto market or on Bitcoin. Now, I wanted to just spend a second because I tweeted out some things about the traditional markets. We're not going to look at charts. We've done a lot of that before. We will do a lot of it in our next seminar because we're going to use traditional markets as well as the crypto markets to describe how all of these technical systems work together with the major ones that we're following now, which are Hyperwave and Consensio. How do they fit in? I've just given you a brief overview by looking at these things and talking about them right now. But in the traditional market, we are still bullish. We are 50% in cash, but that's not my opinion. That's what Consensio has demanded that we do. We've gone from a full bull market just 7 weeks ago to what could turn into a bear market. But you don't want to speculate on a trend change. You don't want to say, okay, things are turning down. Some of the FANG stocks look really bad. Some things like home builders and other commodity prices, oil prices look bad. Therefore, we're going into a bear market. That might be true, but you don't know it and I don't know it. The market knows it though. And the market gives you paint by numbers strategies to take step by step what next color you have to put on the piece of paper. You start with 100% in the trend, in the stock market. The price starts breaking down and the short term turns down. Well, that could turn into a horrible bear market. You don't know. But what you do is you take out your little paintbrush and you start painting, you know, all the blue dots. And then if price keeps going down, the short term turns down, and now the price gets down to the intermediate term. And now you take another color, another 5%, another 5%. And all of a sudden you find yourself 50% in cash. And you might go back into a bull market, you might go into a bear market, and you don't care. Because the instruction manual will tell you step by step how to get back into the main trend, or how to get into the new trend to the downside. All we're waiting for is for the price, the short term and the intermediate term in the traditional markets to close below the long term and the long term to turn down. At that point, we're out of the market. Now, what does that mean in terms of opportunity and risk? Well, it means almost in every case that you are out of a major trend within the first 10% of a drop, and you've got 90% to go, and you're fully in line with the new trend. It also means you lose opportunity, because if the market, which it's trying to do today and yesterday, the stock market, US, continues to work its way higher, if you had been 100% in during that whole period, you would be making more money than if you had not gone with Consensio and stepped aside piece by piece. I will, in every case, 100% of the time, lose that opportunity rather than losing that money. And that is one of the main adages that we use over and over again, which is the trend is your friend, not because of it's a cutesy saying, it's your friend because a trend tends to keep going in the same direction for a very long period of time. And therefore, you go with that trend and you'd never bet against it by, in an uptrend, attempting to sell or go short against that trend, and in a downtrend, trying to buy. That's why we're not buying Bitcoin. That's why we're not buying cryptos. The trend is obvious. The trend is no longer obvious in the traditional markets. We're at a 50-50 coin flip, and it can go either way. And therefore, you should expect to see our portfolios 50-50, which is where we are. And if we go down from here, we will quickly be completely out of the traditional markets. But if we go up from here, we will do it step by step, cautiously, until the trend has reestablished itself. So those are the basic parameters we wanted to talk about today. And some people were confused by my tweets about the traditional markets. So I wanted to just clarify that. And we've already gone 45 minutes. It's unbelievable how once I get off on these riffs, you can't shut me up. And I'm sorry about that. But I will say thank you and turn it back over to Leah, who wants to remind you once again that we want to fill up this webinar. And I know we're going to fill up our Hyperwave in-depth workshop. And unfortunately, we're going to have to increase prices on that because we've got limited seating space. So please get in as early as you can to make sure you get in as cheaply as you can. Even at our maximum number with Bitcoin prices falling, it's not expensive at all for what you're going to learn. But I'm going to turn it back over to Leah. Thank you very much.
Ty, by the way, speaking of traditional markets, Powell is live right now, and he is very happy about the economy, and markets are a little happy with him right now, but he's like super neutral. So that's good fun. Yeah. You got some questions. You want to go for them?
Absolutely. I can stay here all day.
Stop. I can't.
Oh, okay.
All right. So you actually got some really fun ones. Nick is here. So I'm going to throw one that people were, that apparently you and Nick have divergence on. And so is Corey. Hey, guys. So what does Tyler think? What do you think about the other two previous impulses? I believe that's probably pulses of 2011 and 2013. Apparently Nick says this is the third one.
Yeah, I don't argue with that. I just argue with were they hyperwaves? And we're splitting hairs here. I'm never going to argue with Nick about his understanding of technical analysis. He's a wizard in many ways. What overrides my decisions always with any other technical system is if there's a hyperwave, things are very clear for me. Consensio comes second, and consensio can be used short-term, intermediate, long-term for every asset class at all times. Hyperwave cannot. And if you try to fit hyperwaves into things that look like hyperwaves but aren't really, it can become very confusing, and you can end up on the wrong side of the trades. But in terms of the pulses in Bitcoin and in cryptos in general, in 2011, 2014, and the one we've just gone through, it looked very similar. A hyperwave cannot take place without a long runway, and a long runway is a phase one. We've got a group of 40 people that are doing tremendous work on hyperwaves around the world and picking them all apart. And so we're getting closer and closer to understanding how and why these things are, and why many bubbles are not hyperwaves, but all hyperwaves are bubbles. And that's a very important distinction. We'll talk about that in Vegas in great detail. But the first two bounces up in 2011 and again in 2014 were not hyperwaves. They were bubbles. They both broke. Neither of them returned to their beginnings because there weren't any beginnings. This was a full hyperwave because we had 1,000 as a peak. It went on for almost 9 years. That's a good runway for a hyperwave. And that results in the tremendous movements. I've said over and over again that bubbles can go even much bigger than hyperwaves in terms of percentage gains, but they're still not hyperwaves, and you cannot analyze them like hyperwaves. They look like them, they smell like them, they walk like them, they quack like a duck, so they're probably ducks to most people. They are not to me. The people that have studied bubbles and have come up with this human behavior chart that looks like a hyperwave, I agree with that. I think that's a great description emotionally of what happens to investors and speculators when a bubble takes place. And that can be overlaid on both hyperwaves and bubbles. But hyperwaves have got this funny, distinctive pattern that is linear. It is not parabolic. And without going into details, the previous two pulses were not that. They were simply bubbles like normal bubbles are, and therefore you can't expect 7 phases, and you can't predict when the 5th phase is turning into a 6th, or where the 4th phase is breaking into a 5th, or where you're going from a phase 2 to a phase 3 or to a phase 4. That's why there's so few of these. At the time of 2011 and 2014, there was not enough adoption. There was not enough understanding, and there was almost no crypto competition for Bitcoin. So what you had was you had the potential for a macroeconomic event sometime in the far future to take place. By the time this hyperwave, the 2017 2, 3, and 4 took place, we had close to $1 trillion in the ecosystem. we had over 2,000 competing cryptos. We had people in the media, regulators, central bankers commenting on what this thing was. To me, that was the beginning of the macroeconomic understanding of what Bitcoin could become. Unfortunately, in this period, we ran out of gas at 20,000 because Bitcoin was carrying 2,000 lampreys, 2,000 bloodsuckers, ticks, jackals, hyenas on its pelt, trying to climb this mountain. And they weighed it down, and that was the end of this particular hyperwave, which is going to take us all the way back down to 1,000 and remove all of those parasites, because they will go out of business, but Bitcoin will not, in my opinion, because what I've said about the macroeconomic shift that is taking place that could very well have Bitcoin at the center of it, and why I feel that the next pulse, which will come for Bitcoin, is going to be the mother of all pulses we've seen so far. And hopefully, it's not going to turn into a hyperwave that has to go through a 2, 3, 4, another 5, 6, and a 7. But that's also a potential. So we can't rule that out either. Great question though, Nick.
Thanks, Ty. And to everybody in the live chat, and also Ty, you don't know this, I did lose a bet to Nick about for sure the Skins were going to lose against Cowboys, but they did. I am not, okay, I'll say that I'm supposed to wear a wig on the show, but the thing is, guys, I don't have a wig. So if I can substitute that, Nick, with like some.
Oh, I know what you could do. You can shave your head.
Oh yeah.
I think Nick would accept that. Yeah, you're welcome.
Okay, I'm throwing in my own question. You answered a lot of people's questions. Nick says yes. Okay, great. Oh, probably to shaving the head. No. Okay. Okay, which is actually throwing Nick and Tone and some other TA people into this mix, Ty. A lot of people were asking, but I think they're newer to the show, of what, differentiates and, Consensio, you using Consensio and understanding via Hyperwave. And also I'm going to throw into it what they're probably not asking, which is your order of priorities regarding TA indicators. Priorities is the wrong word, but what I'd say your is like sequential list of importance of what you look at first and down, as compared to, what we know about the priorities of what Tone looks at first and down, and just how that, I guess the last part of this rant is just for everybody to understand that TA practitioners are absolutely not the same, which is why Nick come on our show, but also Tone and Tyler are so fun, and we just had Ugly Old Goat and everybody. So that means that, Tyler, please answer. I would say within the technical analysis field, why do TA practitioners see everything so differently? What do you look at first and foremost? And how can we all look at the Bitcoin TA analysis in understand how different practitioners look at the TA for Bitcoin? Sorry, yeah, I'm not loquacious, guys, today.
No, that's the essence of what we want to talk about on December the 9th. And it's going to take us 3 hours plus an hour of questions.
December the 8th, guys.
What did I say?
9th.
Oh, I said December the 9th? Oh my gosh. I'm sorry, December the 8th. Listen to Leah, don't listen to me. And in 3 hours, we will cover a lot, but we won't cover everything. So I can't possibly do it in 5 or 10 minutes here, other than to say that I could name 100 practitioners of technical analysis that know a lot more than I do about various technical systems that they use and have used for a long time and use them very, very effectively. Each one of us tries out as much as we can, and we see what fits with our world viewpoint, our market viewpoint, but more importantly, our time frame that is interesting to us. The difference between short-term traders or speculators or day traders and investors that have a long time horizon because of their background and who their clients are, and that shapes our worldviews on both ends of the time spectrum. And that also means there's a big middle gap where a lot of people couldn't understand why, when Bitcoin prices were dropping down and we had these huge runs from 6,000 to 12,000, from 6,000 to 10,000, from 6,000 to 8,500, you can make a lot of money in those, and those are intermediate term position or swing trades. Well, anyone that's on the short side or the intermediate side of technical analysis will be all over those trades. And people were kept wondering, why weren't we doing that? Why wouldn't I say what I felt? And I tried for a while, about 2 months, some of you may remember, I gave short, intermediate, and long-term outlooks for Bitcoin prices. But that got so frustrating for the listener as well as for me, especially on the short term, which I defined basically as a short number of days, intermediate term is a short number of weeks, and long term is a short number of months. The terminology got very difficult. So instead of keeping with that, I just made it very clear that I am interested in the long-term trends of asset classes. And therefore, the technical systems I use are used to identify those first. Within that, I then move to the intermediate term. And the last thing I ever look at, and sometimes I don't look at at all, is the short term. That's why I am not interested in bounces in Bitcoin at this point, because we're only talking about short-term trends. We're not anywhere near talking about intermediate-term trends, and the long term is obvious. Whereas in the stock market, because the long-term trend is under attack, and the intermediate has already turned down for 6 weeks now, and the short term is a coin flip, you have to go from the long term down to the short term in order to determine what the long term is going to do. That's what Consensio says. And that's why I talk shorter term in a trend that is clearly not doing what it used to do, which is 10 years up. So that's my quick answer. But please tune in on December the 8th at 2 o'clock. It's going to be a lot of fun. We're going to go into a lot of detail. We will talk about a number of trading systems that I have not talked about here, a couple of which are proprietary to me, such as the broadening top that we call the Selgin system, but a couple of others also that I call capital market quanta. We will, for the first time, get into details of those, but things like the Copic curve that I haven't heard anyone talking about, and it's one of the most powerful tools. I've used it for 25 years. You only use it on major trending changes in markets, usually with the S&P 500, but it can be used across all markets. We'll go into that in a lot of detail also, plus all the ones that you hear us talking about and others talking about. I want to give you a semblance of understanding of how all that can fit together without blowing your minds.
We will definitely, hopefully, blow everybody's minds. And definitely, we talk about Wells Wilder Jr. all the time, so you'll get a good bio of it. But also, I don't want to do too many spoilers here, but the background of the TD sequential shouldn't be really named Tom DeMark. So or TD. So we're going to go into Larry Williams, and just it's going to be really, really cool. Ty, I'm going to ask 2 questions. I'm going to throw in traditional markets, but I'm going to get selfish for a second, which is, since we were just talking about your perspective, given that you're a money manager and that we look more long-term trends, and that's also because specifically we want to make sure that our fiduciary clients, but also all the rest of our clients that we're consulting for crypto are okay and able to make sure that they make money in these markets. Throw in my background, Ty, which is just simply that I follow fundamental analysis, and I am terrible at understanding everything that you and Nick and everybody is talking about, but how fundamental analysis also comes into play when looking long-term, and also how it comes into play with Consensio and Hyperwave, since y'all TA people, the rest, for the most part, like to poo-poo FA.
Yeah, it's a great question, because my background is fundamental, it's not technical. My undergraduate degree was in international relations. I wanted to be an international lawyer, but from the perspective of understanding governments and policy. I did get a master's degree in business by accident. I don't like business, I don't like finance, but it was the only thing that I could take that the military would pay for while I was in the military in the Coast Guard. So I got a master's degree in business, and luckily I did it at a school at the University of Hawaii that is linked with what's called the East-West Center, that is basically studying trade between Asia and the United States. And Hawaii being right in the middle, they had great professors from Asia as well as the United States talking about macroeconomics and how trade and the big picture of finance starts everything off, and you come down to it. So I loved what I was learning, and then I ended up in this field because one of the professors happened to be the manager of a Dean Witter brokerage office in Honolulu, and he said, when you get out of the military, come and see me. And I've been doing this ever since. But during the first 5 years of me doing this, I latched on to not only the fundamentals behind not only corporations going up and down, but economies going up and down, and the fundamentals macro economically about central banks and banking and interest rates and inflation and credit and debt. So everything that I do in the technical world is based on an understanding of what is driving possible trend changes. And that's why I say Hyperwave had to come out of the combination of my love for technical analysis and my understanding that fundamentally something was shifting. And you didn't need to understand that a great deal if you simply look at where hyperwaves had occurred historically to put two and two together. And then all the other things, I just fell in love with Wells Wilder Jr.'s work, the ADX system, the directional movement, the RSI, the broadening top work that he did with the Edwards and McGee stuff. That's where all of my stuff came from. Because after hearing that, partners of mine and myself got together and figured out ways to simplify all of that, and therefore the technical analysis. So you hear me today talking all the technical stuff, but it's important to understand that it's all based. I always go back and ask the question, why? Why is this price moving this way? Is there an explanation that will help me to better understand the probabilities of which technical systems I need to use to look for cracks in the information flow? Now, day traders and short-term traders and speculators don't need to take that extra step. Technical analysis is powerful enough on its own to be able to move quickly as things are happening with price. But the longer you go along that continuum that I talked about between very short, intermediate, and long term, the long term, most people say, is unknowable. And I'm just the other way. I think the short term is unknowable unless you use technicals. The long term is unknowable if you can't marry technicals with fundamentals, macro fundamental items. And in between, if you're a stock trader, knowing fundamentally why Facebook or Netflix or Amazon or Google or the FANG stocks or the tech sector or the NASDAQ 100 or the NASDAQ is acting a certain way, it helps you technically to put together the fundamental pieces of all of that. And as Leah said, that's what almost everyone on Wall Street does. But those that are the most successful do that as well as marry it to the technicals. And in my opinion, the most effective of all of them lean on the technicals, not on the fundamentals, but they don't ignore the fundamentals.
Thanks, Ty. And I guess just one last comment, and then maybe we'll go off and do another one soon, specifically looking at traditional markets and some questions that people had. As background for how Ty was helping me earlier in my career, and how they're married, and then make one comment, and then we'll head up and actually have a Harry Potter question for you, which is just that so my background for fundamental analysis, everybody, is working for a couple activist investing hedge funds, and specifically doing macro trades, but looking into which companies and Asian equities you should buy majority shareholders of. I think we lost Ty, but that's okay. But when it came time to knowing exactly what price points we should buy and sell these actually publicly listed companies, that's where great TA came into place, and Tyler helped me set those price points. So, oh, wow, okay. Okay. Okay.
This is my Harry Potter collection.
Oh, so
Since we're going to talk about Harry Potter.
What's your Patronus? I'm like, are you serious? You had him right there.
Yeah.
Oh God. Okay. I think we'll end right here. Oh, maybe so people were calling you Dumbledore, which I think you'd make a fantastic Dumbledore. Who's your favorite character in Harry Potter? And we'll end.
Dumbledore.
No. Okay. Everybody, yes, we are speaking on Friday at the Washington Elite Conference. There's McAfee, my least favorite person in the world. I'll just say that. But also a lot of really interesting people, including the Mooch and some people, the founder of Digibyte. So I think Tyler and I are going to have a lot of fun doing our Bitcoin maximalism X investment strategies at this conference. We're actually speaking. I'm speaking, Tyler's speaking, 20 minutes, and then us together, and then we're on a panel together. So it's actually going to be so awesome and so much fun. So that is Friday, and then Saturday we're speaking Friday. And then again, yes, our webinar. So if you go to our website, lucidinvestmentstrategies.com, and yes, lucidfunds.com will soon be merged, so you get both products. Webinar, December 8th, all technical systems, going to be awesome. Ty. Don't follow.
Thank you all very much. Interesting times, and they are going to get much more interesting into next year and the next 2 or 3 or 4 years after that. The macroeconomic picture is not changing. It's in a dire position right now because of credit and debt. And there are 4 solutions, and Bitcoin is one of them. And the gold standard is the second one. And growing out of the problem is the third. And the fourth is the worst of all, but unfortunately the most probable, which is defaulting on the debt. So everything you hear from us and from everyone else that you're listening to now in some way relates to those 4 possible conclusions to this problem. And we're going to start talking more and more about that as we go on, because everything else doesn't matter. It really doesn't. What the price of Bitcoin is, what the price of gold is, where the interest rates in the United States are, what the new deficits and debt look like, those are all tiny bits of information relative to the big problem. And we are living through it. We are approaching some terminal points very quickly. And each one of these markets that you hear us all talking about, Tone and Nick and Ben Zen and Ugly Old Goat and Willie Woo and Peter Brandt, all of it together are reflections of this bigger phenomenon. And we are going to start talking more and more about that. Thank you all very much. Hope to see you on December the 8th. It will be a lot of fun. Thank you, Leah. Great job.
Thanks, everybody. And yes, we will hopefully vlog every day moving forward. And Tyler's going to be here in DC this weekend, so we'll do shows together. All right, everybody, have a good one. And yes, Tyler was on Max Kaiser, and he killed it twice. So you guys should definitely check that out. All right, bye.
Great. Bye-bye. Thank you.